Hello, Warriors. Alexander, Richard, let's have a great week. Who's up for having a great week?
Me.
You are? Okay, Ryan.
Morning,
Who
mate.
else? How are you, buddy?
All good, you? Good weekend?
Yeah, nice weekend. So here we are. We were talking about this Friday, Ryan. You know, this little triangle, and got that surprise NFP almost at 2%. Didn't seem to have a lot of impact on much.
No, a bit surprising, really.
That was kind of puzzling to me. So I'm wondering what you're thinking after last week's big bashing in the dollar. Euro continues to show more relative strength over cable expressed by EG.
Yeah.
I was looking at this, Ryan, and I actually hadn't looked at a monthly on EG for a while. But when you look at the monthly, as weak as it's looked, because most people, don't go past their dailies or weeklies, we had this big move in 2015, and, for about 4 years, we've just been moving sideways, consolidating this. I don't know if this could maybe be a continuation formation, and this could really be a big trade to the upside.
Yeah, well, it look at the weekly, it shows it's still got a lot of work to do. It's had a big move off of 83 last week, but look at the trend of the last year. It's still
right.
Edging downwards. So it's got until we crack sort of 87 handle.
Yeah,
then,
I see.
The trend remains. That's a really big level up there.
Okay. All right. So we had the 2-week reversal, and I don't think it's going to negate it this week. But anyway, I'm just looking. I'm always looking ahead and see what potential for a move might be, and that monthly just shows it to me. The dollar index. I guess we're getting to the level where we could completely negate. We already negated this breakout. I guess this will be real big, where Blake probably has these alerts here at 94.5.
I think it's the early part this week is going to be about continuation. Are we going to see a continuation in these moves?
Yeah.
From Friday, if they continue, then we're edging towards a big trend change. But if we can't break the big levels, if euro dollar can't break 115, if your Dixie can't break that 94.50, it's all if. Then you got to ask the question: what's it going to do if it can't break these levels?
Okay. Anything new that you're doing in the markets here for this week, or just kind of waiting for direction? Monday's kind of a follow-through day from last week. I was looking at the Canadian as well, and I don't know. To me, it looks like it's not complete. It's putting in higher lows. It looks like it could maybe make a run up here towards 31. What do you think of USD CAD, the loonie? Tough call.
Sorry, mate. Switch my mic off. I took a little short on Friday, just when we because we had the Canadian jobs report as well. So it was
right.
Bad jobs report in Canada, good jobs report in the US, and I shorted it at 74.
Here?
Yeah, okay. 74, just a sort of little scalp, and I'm still in that. I'm going to try and knock some out at 127.
Okay.
But I think, for me, I'm just nursing a few trades: long euro Swiss, long euro dollar, long Aussie still, long dollar yen still on the long term. Still got a bit of short euro sterling. It's just managing, and if we start to see the levels hold, dollar yen, if we get back down to that 1475 area, it's a small level from last week. Euro dollar, the break level for me in euro dollar was 114.15, 20, and we've pretty much held that in the 2 attempts we've tried. So that tells you that it's building support, which means we've got to have a push to the highs, and we've got to crack that 115 area.
Yeah. And cable?
Yeah, cable's always a mess sometimes. It's a little bit in limbo at the moment, as you can see there. Take the years range. looks an awful lot like the S&P. If you look at the 2022 range, hit the high, hit a low, and now we're sitting bang in the middle. It's S&P is exactly the same. So, you might be able to trade one, trade the other sort of thing. But a little bit needs a bit of direction. And we know, I think it's going to be driven by the euro. If the market is going to get right into this ECB, turning the tightening page, then that's going to hit, as we know, euro sterling, that's going to see that higher. And by proxy could drag cable lower.
Okay.
So, yeah.
Aussie's showing some life today, Ryan. You must like that it so far has put in a higher low.
Yeah, that's a nice little signal there. If you on the dailies, you just want to see that. You want to see the lows being cemented, if you like. We had the break under 71. Couldn't quite get as low as the end of Jan lows. Around 70.25 odd. But yeah, we're back above 71. Clawing our way up, get above 71.50, and we're heading for 72. But it's all small steps, as soon as it gets knocked down, it has to do all the hard work all over again. And you got that, what's it, the 200 DMA just floating around there, around 71.
Right here.
50. Yeah.
This here, yeah. That's a daily, right?
That's the steps. Get above that, and we should have a look at 72.
Yeah, like a little A, B, C, or a little 1, 2, 3 up here. And then we'll see. Yeah.
What's that in darts terms?
Yeah. Richard Adams saying SPX drags the pound around. Okay, so Stel,
good morning.
I have pretty strong opening in the metals today. Any comment?
Well, we've seen this in the past few weeks, some strong days and some weak days. Again, we're unfortunately, I think we're still range trading, and we're going to test either those very important lows, which come in at what, the gold 1680, 1690, and silver really the low 20s. Or we're going to break out higher from the previous highs. Until then, we're just chopping in a admittedly big range, but and we're having such days like today. Why are metals so well bid? Why is silver so well bid? I don't know. Why was it down 2% the other day? I don't know. It's quite volatile.
Wait, you're just saying why is and good morning, guys. Why is
good morning
Stelios why is Stelios so bid? I'm sorry, it's early in the morning.
Why is Stelios so bid?
Why is Stelios so bid this morning? No, why are precious metals so bid? Yeah. Couldn't you argue that it's just there's probably just as the dollar's weak right now?
But Friday was really when the dollar was tanking, and actually no, let me put it this way: late in like Thursday and Friday, and the metals were not doing much. Are they catching up now? It's
and then also I want to mention this about the precious metals, and I know you guys have been looking at it too. We're in this big, huge triangle, and so when you're in an apex of a triangle, I know our traders know this because I say it every day to the ForexAnalytix subscribers. But when you're in a triangle and you're right in that apex between breakout points, a lot of times moves happen for no reason. And I've found over the last 25 some odd years that things start whipping around really aggressively in either direction before you see a breakout occur. And maybe that's just it. So.
Yeah, it could be. Yeah.
Anyway,
but
sorry, go ahead.
I don't see a particular reason today for that. But in any case, I'm still bullish, but I don't think bulls are out of the woods yet. So I'm not. I'm still holding my horses. What I am looking at is bonds. I think the whole world is, and 10-year US is getting close to 2%. I actually read something really interesting. We're seeing European bonds move quite a lot. Like today, 10-year Greece, 10-year Italy are going quite a bit higher in terms of yield. But the interesting stat I read just a few minutes ago, the Schatz, the 2-year German bond, past 6 years range was 45 basis points. Past 6 days range is 41 basis points. So it's starting to move, and I think it's right for that because let's face it, the ECB have changed their tune a little bit, not massively, but they've changed it. And now we're talking about rate hikes later this year. I mean, 2 weeks ago, anybody spoke about rate hikes this year, you would say they're crazy. But it looks like Bank of England is now hawkish. I think another hike in March is almost a given now, given that they wanted to hike 50 last time, almost did. And the ECB is turning hawkish. The Fed, well, they're continuing with what they've told us already. And we've said this before, as long as equity markets are not tanking, they're going to push on. And they think that this is what's going to help drive inflation lower. Now, that's debatable, but that's what they want to do. So, as you know, with this backdrop, I don't see how yields can stay low. Yeah. They have to start rising. And when they start rising and when they start breaking out from some important technical and psychological levels, then I think we're going to see equities drop. But at the moment, they're still, trundling along happily. And, it's like the market, I've said this before, it's like the market saying, nah, we don't believe you. You're not going to do all that. You're not going to hike that much. You're not going to do all that. Well, let's see.
Yeah. 1.95 I've got on the 10 years as the next level.
Yeah. What? The 10 years, 10 year US, you mean?
Yeah, 10 years US, yeah.
Yeah. I think 2% is really the big one.
Yeah.
But yeah, let's see. What else? Oil is it's been a monster. I was looking at this over the weekend. 7 consecutive weeks, positive weeks, or something ridiculous like that. It's just a complete monster. And it is 1, 2, 3, 4, 5, 6, 7 positive weeks. And the gain of around 30% in 7 weeks. So, it's where does this stop? I think we're going to see triple digits, and then we see.
That helps inflation.
Yeah, that helps inflation for sure. But that's a problem. Oil and gas and all that, they're becoming more and more expensive, not because the world is running perfectly and there's so much money around and demand and let's buy stuff. No, it's different reasons. But I guess the way the central banks want to fight that by kind of strangling the economy, it's going to work. Eventually, it's going to work.
Yeah, not for good reasons.
Yeah, it's very difficult because they're in a corner. I really don't know how I would attack this problem. If you don't hike, if you don't tighten, everybody's going to be saying, what else are you waiting for? Employment's good, inflation high, so you have to hike. But if you do hike, you're killing the economy. So what do you do?
I think the problem was doing so much in the first place. I mean, they did it for the financial crisis, but they maybe could have taken 5 minutes to think, actually, this is a health thing. It's not the collapse of any economies or anything. Yeah, we're going to get some economic shocks, but do we need to go to the same level of easing that we did for a financial crisis? But we can all look back with hindsight. They built all those emergency tools over the GFC, and this was the first instance where they could say, "Hey, look, we built those tools. Now we're using them. Look at us, pat us on the back." Whether it was right or wrong. The issue is that they were emergency tools. They should have been short term. End of story. Not 12 years of this or 13 years. Exactly. Yeah. Anyway, What else? Cryptos are. I didn't expect this rally. I really didn't expect this rally.
I think Blake caught it, didn't he? I think he caught
catch what? I'm sorry.
Bitcoin. You said I remember you saying you don't want to be short risk because
I know. I was using it more as a risk gauge and
this candle.
Ethereum's above 3,000, Bitcoin's above 40K, and I mean, to me, it just looks like they are rallying, and we're gonna be pushing towards here. I can take over the screen. By the way,
I did hear a fundamental thing from one of my buddies who's active in crypto. There's and Blake, you should probably know. Those Edgar rules that they would have for things to be regulated. They had to meet Edgar regulations. So that's going to come to crypto land. So a lot of these coins and alts won't qualify according to Edgar, whoever he is.
Oh, okay, so what they won't qualify?
Yeah, it's a regulatory standard.
Okay.
Oh, it's something that's being proposed, hasn't been passed, but it's hanging out there. Gensler, it's kind of putting up some type of, regulatory. He wants to regulate crypto, and that's one way he's going to do it. That they have to meet these qualifications.
That makes sense to me. Well, I mean, I still think that you can get a rally here regardless.
Oh yeah.
Well, I think we all accept the fact that at some point they are going to, come under scrutiny and become regulated, or more regulated at some point, which is going to be, it is going to affect prices, and that's I think that's something that we've all been waiting for, right, Stelios?
Yep.
Yeah, I mean, and when they do, it's the market's probably going to have a negative reaction. That's why I don't think Bitcoin and Ethereum and these cryptos have very far to go as far as a rally goes. But technically, I mean, Bitcoin looks like we could get very easily to this 46 to 50,000 range, like somewhere around here. And then if you take Ethereum looks like we can get back to the 200-day moving average, this previous trend line. And remember, we're in a big, this is a big channel that we've been discussing, the green lines here. It's a big channel on a weekly basis. And, we probably will get back to the 38. You can see I have an alert set for 3,400 because I actually am thinking about going short, into the 200-day moving average personally. That's why I had that alarm set up, me personally. But
I think we're still way too close to that 40K level in Bitcoin. You could easily, especially if risk gets sold, you could easily turn below 40K again. So, and that would be a false breakout. So that would be interesting.
I'm with you too, Stelis. And I guess we could probably do the same thing here that we did for Ethereum. You can do this. And you could do this, and you've got the same, ascending channel. That's why I'm a little nervous about being on the short side of risk here, because we are seeing this rally. But if you think about like cryptos, let's just say they recover 38% of this move lower. In Bitcoin, it would take us back towards, let's just call it 47,000. Ethereum back to 3,200. That's a 38% retracement. Then you have a real big setup for a longer term decline. Whenever a 38% retracement technically is only hit, that sets up for a continuation type of move. And so that is a realistic expectation in these cryptos, because they've come off so hard, and we had false breakouts, at the end of last year on both, Bitcoin and, Bitcoin at new highs, and Ethereum above high. So yeah, that's all a risk right now with those. But let's talk a little bit about the dollar. What do you guys think about the dollar here? Or we could actually put the euro. I know I gave my thoughts during the week ahead video, but what are your thoughts here regarding the euro? We talked about a completion of the flag. Took us up to 115, and I'm hesitant to short the euro or be long the dollar, but at the same time, is this just a consolidation, or are we going to reverse up here? What are your initial thoughts, guys, with the euro?
My view is that the pain trade for the euro dollar to go higher. So I think buying on dips is probably what I'm going to be doing. That
would be the pain trade, right? That would be the pain trade. I mean, you guys. And you guys have talked all about this since the beginning of the year. So, Ryan, you still feel that way?
Yeah, I think it's got a bit more work to do. Just saying to Dale earlier, we got a bit of a range here, 114 to up to 115. 114, 1420 was the big break point.
Yeah,
we're holding that as support the last couple of days. After the NFP and this morning, so it's showing. It's trying to build a base around 114. But if it gets under 114, we're at risk of going right back in the box again.
And shoot, I mean, this move really could take us right back towards, break above 115. Technically, I'm looking at a few different things. This break is already had happened. So, move back to 117, back to this previous support doesn't seem illogical to me. And let's not, ignore the fact that we have this, this is a multi-decade trend line that I traded off of last week down here below 112. But, that really held, and we caught a lot of people short. And like Stelia said, the pain trade is probably higher at this stage. So now we got CPI later on this week, as I highlighted during the week ahead video. That's going to be, the marquee event of the week. Anything else on you guys' radar that you're looking at this week?
Not really. It's always a quiet week after the NFP, but CPI will be the one. There's a few regional or Eurozone retail sales in Italy, but not too much really on the data front.
Yeah, well, you can argue
CPI?
that CPI is and inflationary pressures are probably more important than jobs data at this stage, because all the attention's obviously on inflation, and it's what's going to make or break the consumer, right? So it's probably this Thursday is going to be if there's a day to be in front of your computer trading, it'll be the CPI release, and we'll be covering it live here on the F.A.C.E webinar on Thursday. So make sure you're here.
It's expected higher. CPI headline 7.3% expected versus current 7%. The core is expected at 5.9 versus 5.5% prior. So it's expected higher. It's really going to take if it's stupidly higher, then 50 point hike is going to be priced in for March.
And how negative of an impact is that going to be on equities? If you see a stupid high print on inflation data this week, and let's say we get CPI, and I'm just talking month over month. Let's say previous reading was at 0.6%. We get a 0.6% because people are expecting that, or excuse me, we get a 0.7%. People were expecting a decline this month. So let's say it's an upside print well above expectations. I mean, does the S&P really come under pressure at that point?
I think it might do, just from the fact that the Fed might have to hike harder and faster. But as long as I've said it before, as long as the jobs market's okay, as long as the the economy is ticking over, it's one thing I've said. You can pull the easing side out of the equation, pull the QE away from the punch bowl from the stock market. But then if you've got a solid economy, that's a positive for stocks in anyway. So that takes over. The actual real fundamentals start taking over. So as long as we don't see consumer spending crimped by high inflation and higher rates, there's a reason again in the stock market just to buy the fucking dip.
Yeah. Wait, did you just use that
what?
word?
He said
what?
the free.
Wait, hey man, there's kids here. Earmuffs, children, please.
Flipping.
All right. So 45.20 is the level I'm looking at in the SPOOs. And when I look at currencies like the Aussie, we've been recognizing this inverted head and shoulder pattern in the Aussie. And as you guys know, I was buying the Aussie at below 70 cents. But man, when you see currencies like this, heading higher. I had a discussion in the chat room, a couple of it was a couple of days ago. It was actually on Friday. That I'm concerned, and I kind of want to throw this out there and get your opinions here, that we might start to see a shift in how these commodity currencies respond in the market. Commodity currencies and emerging market currencies tend to be risk on.
Sensitive.
Yeah, they're associated with risk on, as markets go up, and they tend to go. There's a time like when you're looking at crude oil, and you go, okay, crude oil going higher suggests that they're a stronger, more robust global economy. People are driving more, they're using more energy, but then there's a point where crude oil going higher, it becomes more of a headwind for consumers and consumer spending globally. And you start to see, higher crude prices bring risk off. I'm I'm in the camp that with this inflationary data, especially if it doesn't back off, we again talking Thursday, if inflationary data continues to stay sticky, which I tend to think it will be. I don't think it's going to ease off like a lot of people are believing at this point. If inflation data continues to be pretty sticky, you might start to see the likes of the Aussie and the Kiwi really start to rally as inflation stays high and stocks come down. And that's why I was starting an initial discussion about these commodity currencies roles changing a little bit at these levels. And remember, I do think the Aussie is very well priced based on what's happening currently. So what are your thoughts with that, regarding the Aussie and other commodity currencies just in general? You guys
I think they're going to be driven by risk, as they have been, minus the some fluctuations maybe, but they're driven by risk. So you want to trade the Aussie, I think you trade equities. It's a big proxy. I don't see how they're going to diverge from risk. I really don't.
You don't think it will? Okay, all right. That's fair enough. So. I'm just wondering your opinions. Ryan, do you have any opinions about that?
Yeah.
Look, I've been trading the currencies for almost exclusively, like 90 some odd % of just currency trades in the last 20 years. And I've only seen the Aussie risk on, risk off. So, this would be a big departure from what we've seen. So, but what are your thoughts here?
Yeah, pretty much the same. We've got the RBA in the hat as well. They're turning hawkish as well, not ruling out a hike this year. So it's just another piece of the jigsaw puzzle. You've got to think as well in terms of the rate situation. All global rates are now heading higher. Interest rates are heading higher. And that is a natural boon for currencies and for commodities, like you say, on the risk on, risk off basis. And maybe I'm talking my book a bit, but I can see this running higher. It's been in a downtrend for several years. And if that's all been about the dollar, and if the dollar's found its level, then it's down to other currencies to then start appreciating. It doesn't mean that the dollar's going to collapse because of what has happened in the US, but purely the fact that other currencies are going to play some catch up.
Yeah, isn't that funny? You just said the dollar collapse. That's like everybody's like doomsday scenario, like the dollar is going to collapse. The dollar is going to collapse. The dollar's not going anywhere. But yeah, you're probably going to see some catch up of other currencies, right? As the dollar loses less dominance or loses more dominance, in the decades ahead, right? So, that's probably.
I don't even think it's a dominance thing. The dollar's strengthened for how the US has coped with coming out the financial crisis and coming out of this one, the virus and everything. So, dollar going down doesn't necessarily mean everything's bad in America. It just means other countries are, as I say, catching up. And returning to growth, returning to better fortunes.
And I've been
always two sides of the currency pair. It's what a lot of people forget. Everyone thinks that the dollar is the be all and end all. Well, no, there's always another side to a currency pair.
True. And I want to point out something really quick. I've been pretty adamant over the last several months playing the dollar Mexican peso to the long side down here as we were basing last year. We got this really nice rally, but we sold off pretty aggressively. And I want to, actually go back to the COVID lockdown, that breakout in the dollar Mexican peso, that false breakout after this, and by the way, just so you guys know, I remember, and this is not the right feed to be using here. I remember when Jim Cramer called the low right here on CNBC, because I was long dollar Mex right at this turn. And Jim Cramer got asked about the Mexican peso, and he's like, "Oh, the dollar Mex is going to go, Mexican peso is going to continue to rally to all-time highs and blah, blah, blah." And yeah, that was the day that it reversed. I remember specifically, but you can see this is over 10 years of the dollar Mexican peso rallying. And look at that false breakout back in for COVID. Same thing with you could argue the same with the US dollar, Norwegian krona. These currencies, and I know Stelius would agree with this as far as Norway goes, and especially with their with crude and everything else. I'm actually thinking that these commodity currencies, you can do the same thing with the Aussie, right? I called this a generational low. Like, I think 20 years, you're not going to see that even come close to being tested, basically, is what I'm saying when I say generational low or high in currencies. But these levels are never going to get tested, or not in many, many years. And we're seeing longer term reversals of the dollar and some of these other currencies staging a really big move. And in an inflationary environment globally, I just showcased the Aussie, which I think is going to be much more bullish in the months and years ahead. Mexican peso, which will probably, collapse is not the word I need to use here, but, move back into the teens seems very logical finally. And like, you take Norway, which is very, correlated to crude, will probably trade, down towards 7, maybe even lower again, in the months and years ahead. You guys have any final thoughts before? Oh, shoot, it's already interview time. Anyway, final 2-second thoughts.
Have a good week.
Yeah,
Tracy's not here. Tracy's not here.
Oh, Tracy's not here. Oh,
yeah. So I'm looking for her.
Okay. All right.
I think you mentioned Norway. I think it's
Forex guest hunter.
I think it's going to be trading way lower, like in the 7s or maybe even below. But I think we are really in danger of a breakout higher before that.
Really? So you think we go higher before lower? Okay.
If we get risk off. If we get risk off, I think we go higher. We break out, we take all the shorts out, and then we go towards it. I think in the medium term, I mean, I'm talking about 2-3 years ahead. I think we're going to be a lot lower. But I think we have this big risk simply because we haven't had a risk-off move, which theoretically should be coming, right? With rates rising and all the hawkishness, it should be coming. It's not, but it should be. So that's why I'm a little bit wary.
Well, one thing you need to obviously bear in mind when you're talking about the krona is because of the sovereign wealth fund, heavily reliant on oil as well. If oil prices are shooting up and the wealth fund's making more money, then the Norges Bank will be, looking to sell a lot more of the FX.
Yes.
And how much exposure do they have to U.S. equities?
They own something like, what was it? It's like I can't remember the percentage, but a pretty decent percentage of all U.S. stocks, right?
It's a ridiculous percentage, right? It's like you're talking almost double, like a big single digit number.
Yeah, almost 10%, something ridiculous. Yeah. It's $1 trillion sovereign. Sovereign
wealth fund. So yeah, and I mean, you guys think about that. it's
above $1 trillion now. Yeah,
that is crazy. So what happens if and that's one of the risks, right? I mean, if equities do, this is the reason why Norway gets killed, right? So Stelius is correct. If you see, if we do have some big risk off episode, which I'm not anticipating, but let's just argue that point. Let's play devil's advocate here. Let's say S&P drops below the 200-day moving average, which you're talking move below 3,200 or whatever. Yeah, the US dollar, Norwegian krona, it will at that moment in time will do what Stelius is talking about. It'll be back at 10 first, right?
Yeah.
Yeah,
I have this fear. I would love that because I really, really want to short it.
Yeah, or you want to buy Norway, right? I'm with you. Yeah, I actually do too. You got to hopefully be you want those opportunities to get positioned, right? And so hope that they come. So did Chi Girl get come here?
No, and it's unusual, and
it is. She's been here a dozen times, maybe.
More than that. But anyway, I'll just bring her back Friday. I'll get a hold of her, and that's why I keep some Fridays open.
Yeah, and she was I just looked. She was just on social media like 30 minutes ago, which is rare for her. And I've had her as a guest multiple times on Trader Summit as well. So it's If you guys showed up for Tracy, I'm sure there's a good reason why she is not here at this moment. So
yeah. But we'll hear her before the week is out. Promise.
Well, okay. Well, you know what? The good news is I just saw Grega pop in. Maybe he wants to say a few words. Like I said, I just saw him pop in here. So, Greg, are you around?
Yeah, I'm here.
Hey, how's it going? You guys might be in for a real treat today. So, good. So, what are your thoughts here in the markets from an Elliott Wave perspective? I mean, it kind of feels like to me we're in no man's land. I mean, you got the euro dollar that's pushing its way up until 115. After a massive rally, nice bull flag pattern completion. You got the S&P that's, we've had a nice recovery, but we struggle at the 618 retracement, which is at the 4,600 level that everybody knows it's a big fib level. What are your thoughts here on the markets? Do you have any specific or any opinions at this point?
Actually, I see euro dollar breaking this important trend line from May 2021 highs. So I'm thinking that we are in a stage of a higher degree free wave recovery that can take us even towards back to 1.17. I'm also looking at stock market. I see the S&P 500 and also DAX trying to complete this consolidation that is now underway for the last few weeks. So I'm thinking about more potential upside on stocks in the next few weeks. And if that's going to be the case, I think that euro dollar will just continue higher after this recent reversal, which after all, euro has been one of the strongest last week. So maybe it's now time to shift some directions here. So if DAX, as you can see yourself, I'm looking for a big triangle here. Okay, it's actually a triangle since September or so. Yes, you connect this. It's a very triangle. And then you have their lower lows, yes.
Something that looks like that, roughly.
Yeah,
and I wouldn't be surprised here. And I know you're not necessarily a harmonics person, but I wouldn't be surprised to see that Gartley develop and us see a little reversal like that back, for an eventual breakdown, right? But that means that near term we could see a recovery, just like we're seeing in the S&P.
Yeah, so I'm actually, as we spoke also on one webinar in the past, I'm seeing consolidations on any major indexes, and I'm expecting that euro will just do much better when those are ready to resume higher. So that's the concept.
Got it. Hey, real quick, Gear just wrote in, and he must be Googling right now. Norges Bank owns 1.4% of all listed stocks in the world.
Jesus Christ.
That is crazy.
A country of 5 million people. Let that sink in. Well done, Norway.
I mean, my city that I live in the state of Arizona is bigger. The metro is bigger than Norway. And they own 1.4% of all listed stocks in the entire world.
That is one well-run country, man. Seriously.
Yeah,
I have nothing but respect.
I'm moving to Norway. If I could wear flip-flops all the time in Norway, I would do it. I would go there.
Well, you could. You just got frostbite.
I could. I would lose my toes. Yeah. and Paul writes in. He said, "And BlackRock owns the rest." Which fair point. This is probably true. Well, hey, Greg, thank you for your thoughts here on the DAX and on the S&P and on the euro. Anything else stands out here to you? I mean, I'm looking. By the way, just. Since we talked about it a little while ago, here's gold, and that's the triangle I see developing. It's as annoying as it is. We were talking about how things just whip around when you're just stuck in a consolidation pattern. Things start moving for no reason, and you wonder, wow, I just got smashed because I was trying to take sides in a triangle, and that happens. But anything else that's sticking out for you?
Yeah, I'm looking for a break higher on the US yields towards 2%, and I think that gold can face very nice resistance out here at 18.15, 18.30. So I'm looking for another dip on gold
You're still looking for 1720-ish or so, Greg, on that big, it would complete a triangle, I believe, the last time you were here, or
yeah,
time before.
1750. Yes, that would be minimum objective, yes, on the
I
downside.
remember everyone's trades. And Blake, you're looking for.
Yeah, I know. Hey, you know, Dale's got a sponge head, which is great. I love it. It's good.
It's
know,
good
and-
when I get punched. I can absorb it. So,
But you know, one of the things, I guess, I just looking at this technically on yields, we have 161% extension of that last move lower in the
Right
March
here?
2000. Yeah, we're at 127% confluence. So you know, bunch of whoops. That's not what I want to do.
168.
Bunch of confluence of fibs right up at where we're at right now. That's not to say we won't break higher, but I guess if you really start cracking 195 or 2%, it could we could start going a lot higher than people think. You know, like everybody's like, oh, you know, the market's going to be capped when we get to 2%. Well, we break 2%, and then next thing you know, we're at 2.2% on the 10-year. And you know, how does the market respond to that? Right.
Is Greg's piece on oil available on our site that he dropped in Skype?
I'm not.
That's on Trader Summit.
It's on Traders Summit.
Okay.
If you
Everyone
scroll
here it is,
down,
it's right here.
Out.
there
Yeah.
you go.
Get out.
Yeah,
There it is.
here I'll put it right in the link for everybody, so you guys can all see it. I'll put it in the chat box before we sign out. So
So in
everybody
between
go grab
Greg's
that.
modeling assignments, he wrote a
What
piece
is-
on
what is this?
WTI.
what is this modeling photo stuff you got
Huh?
going on, Grega? I mean, come on, man.
He
Making us
is
all
the
look bad.
best looking one. Best.
Greg
best
is
looking
definitely
one.
a model and the
Okay.
best looking one of the bunch. So that's for sure. So I'm sorry, Greg. Go ahead. Do you have anything else that you're looking at here?
No, not really. I really like Aussie, generally speaking. I think that Aussie eventually will see some nice moves to the upside, but I'm not really sure based on the recent price action if that's going to be the case already now from here. So I'm watching it from a distance, but I think that sooner or later Aussie will be making some very nice opportunities on the long side, probably maybe in a few months.
All right.
It's a very nice deep correction from 2021 highs.
Perfect. All right. Well, Grega, hey, thanks for stepping in and joining us this morning. Dale, you go lock down Tracy.
Forex
and
Guest Hunter is on.
Forex Guest Hunter is on the prowl. Ryan, Stelios, thank you guys for being here as always. And you guys at home, make sure you try out ForexAnalytix. It's $1 for 10 days to join in one of the literally most active communities in the trading world. You know, we post our trades. You got the macro flow chat room. You got a Spanish chat room, news and research, where people post all their news that's come out, news reports that they've seen, and our general chat room. Very active community. And by the way,
after F.A.C.E ends, normally 15 minutes after F.A.C.E, you could all just go into the morning edge and
in 30 minutes, I will be doing the morning edge, going through all of these instruments with everybody, kind of a top-down analysis, and that's private for ForexAnalytix subscribers. And then Stelios and Steve usually go through, like a bunch of different stocks and ETFs and, different markets that are moving and, different instruments. So yeah, come see us and make sure that you, take your trial. It's $1. $1 flipping dollar. All right. See you guys there. And Dale, thanks for being here this morning. And I know, I know you'll grab Chi Girl. I'm sure it's like I said, she's been a friend of ours for years and years and years. So I'm sure it's something.
So I'll check, see what's going on with her. And guys, the trial is the only thing you don't need an attorney for. Okay. So this one will help you pay for things.
That's good.
All right, everyone. Have a great day. Join the team in a half an hour. Remember, don't just count your pips, count your blessings. You're welcome, Laura, Monica, Alexander. Team, Ryan, Stel, Blake, join these guys in a half an hour and invest in your trading career and take the trial at the minimum. So that's a wrap, everyone. See you tomorrow. Adios.